Hey, what's up, good people? Back in Studio A. It's good to be back here. It's good to be back home in my digs. But hey, I did enjoy kicking it in New York City, NYC, with Keenan Grace and the gentleman from Moo. We'll talk about Moo. Today is Moo Monday, but we will get to that in the middle of the video. Let's just talk about what's going on in the markets. Remember, I'm Larry on YouTube. Anything I say is not financial advice. Anything I say is not a suggestion for you to buy, hold, or sell. You got to do your own due diligence and make sure not to fall for spam. I don't have a WhatsApp or a Telegram. I will never DM you and ask you, how's your trading going? All right, I got to cover all of that. Good grief. All right, let's get into it. Banks are still at the top of the market. It's what's actually green or positive for the market today. All right, stocks are mixed, but the market is green based off of the bounce back of banks. Okay, so let's get right into a few things. Let's go to it, good people. There's a few things I want to talk to you guys about. Now, at the time of recording this, we have 2 hours, 2 hours left for the market closes. And as we can see, the Dow and S&P are doing well. The NASDAQ is a little red, but not by much. So NASDAQ is pretty flat. The Dow is up almost by a full point, and S&P almost by half a point. Okay, but let's look at it. Here's one of the things that's driving the market today. As we can see, First Citizens Bank to acquire what's left of Silicon Valley Bank, SVB. SVB was horribly poorly ran. There was so much bad stuff, so many red flags from the CEO, the CFO, board members cashing out millions of dollars worth of stocks, giving bonuses while the company was going down. Failing so-called, not really stress tests, but there were so many red flags. And you would say, why do they continue to do this, right? It's like, the parents walked away and the kids just had a party and trashed the house. That's exactly what happened to SVB. And it is taking the entire market down. Now, remember, myself personally, I got out of the risky plays, the regional banks, which SVB was one of them. First Republic is another. And I got more into, remember, the bigger banks, JP Morgans and that type of stuff. Then I got stumped out with my stop losses on it. So currently I have 0 banks. But the risk reward right now, like I was saying last week, I just didn't want the risk of the regional banks to continue. Let's look at some of the regional banks, right? So here's some of the regional banks as we could see. Let's blow this up a little bit. Here we have First Republic, New York, Western Alliance, PacWest. These are just a few. And as you can see, First Republic is up 10%, right? So that looks good today, right? So some people say, hey, why did you get out? First Republic is looking good. Okay, let's go back 6 months. This is why. You know what? Let me get these out of the way here and I'll show you. This is why. Because, there we go. All right, we got 6 months. It's down by 90%. That's why. So yeah, in the last month, it's still down 88%. So yeah, we're up today 10%, but it has tanked. The bank has tanked. And so let's look at some of the major banks, shall we? As we could see here, these are a few of the major banks. We got JP Morgan. That's a little too big. Sorry about that, good people. We got JP Morgan. We got Morgan Stanley. We got Citibank. As we could see, these are doing well. They're just safer. There's just safety in these major banks. And then, of course, we could see here we got Wells Fargo up another 3.2%. And so these are the major banks. And so remember, like I forestated, I'm currently not in any bank plays right now for a few reasons. If I was, this is just me, it's more risky, high risk, high reward. I get it on the regional banks. They're up more than the bigger banks, but the bigger banks are not going to have not tanked as much and are not going to tank as much as the regional banks if this is your play. I also remember in 2008, it was actually 2009, I believe, when the then president said banks are too big to fail. When he said that, the banks have already been beaten down. So I entered into banks, but I entered in too early, all right, on this one, okay? As you guys know, I got out of banks last year, first quarter of 2022, right? They just weren't doing well. And I rolled all my money over into energy and then sold energy at the top. Got back into energy this time and it didn't do anything, okay? So banks, trying to catch banks at the bottom is very risky right now. I'm going to be honest with you guys. So that's what I did in 2009. It was after the worst of the bank, and it was just one thing after another, like what's happening right now. Banks are up today. They could be crashing tomorrow. Now, they keep saying that banks are resilient. You have all these talking heads that say they're resilient, but they're not showing any proof. And I will just tell you that's just a bold-faced lie. They're not resilient. They're still falling apart, even though we have days like today where the banks are still green. We are not out of the woods, okay? So for those of you that have Moo, I want to show you guys something on this heat map if you're looking for banks, that type of deal, because there will be a time to get in the banks. I'm just not big on banks. I just get them when after something like this happens, but I don't hold, I'm just not into banks this time. I held some Citibank from 2009 and made good money and just held some for years on because it was so beat down. Now, here's what I want you guys to do that have Moo. Moo will be the second link below in the description, or you'll see it'll come up right there. And I want you guys to look at this. It is Moo Monday. Remember, at the bottom, hit markets, right? All right, you see it highlighted in yellow at the very bottom. Then go to the top middle. It says heat map. You want to go there. Now you're going to see banks in two positions, right? So at the left side, bottom left, I'm going to hit that one. And as you could see, that one says regional banks. And so it has a list of all your regional banks. Here's what I want to show you as I scroll and scroll and scroll and scroll and scroll. It never ends. Look at the top. It says 770.664 up. It is an insane amount of regional banks. Insane, right? Amount of regional banks. Now, if you go up to the second row where it says banks in the green because they're doing well today. Now, if you read the top, diversified banks, these are more of the major banks. See here, JP Morgan, Bank of America, Wells Fargo, you see here? And so one of the problems with regional banks is there's so many of them. No, we don't need that many banks, but we do need regional banks. Just think about the PPP loans and how horribly the big banks treated small businesses, right? They only looked out for the big businesses. So we do need regional banks, but not 10,000 of them, all right? All right, good people. So, hey, listen, make sure you check out Moo, download it. You can get up to 17 free stocks, depending on your deposit amount. Let's get this free stuff. The month is almost ending. And then also, too, you also want to check out Stock Up University. I just want to say this. People just want to come there and take the options class, right? Don't just take the options class. We want you to take the TA, technical analysis class, the charting class that is taught by Stocks with Josh. It's important to take that class first. And it's important, I would say, to spend at least a minimum of 6 months studying these charts. You really need to take a full year to get proficient in charting, because if you learn the charts, then when you go to the options, you know when to sell and when to buy. Okay? I just want to make that clear, good people. I just want to say that sometimes you have a cause for pause. Sometimes you just need to pause. I'm pausing myself for a few minutes or a few days in trading and just doing, I'm calling it the great reset, right? And I challenge you guys to do the same thing. If you've been losing money, just stop. Stop trading. Just stop trading for a minute, okay? And just if you don't have any disciplines, you need to write down some disciplines and look at where the market is heading. Me personally, this is what I think. I think that we have another interest rate hike coming. I don't think that from this point out that the Fed will go up 50% based on the data that we have. He keeps saying he's data dependent, right? And I see him going, of course, next month there is no FOMC meeting. And then the month after that, we're having another interest rate hike, depending on what it is. I expect it to be 25%. I expect by this summer, I don't know what month, that the Fed will go neutral on the interest rate hikes. And I expect, this is me, in spite of what all the other talking heads are saying, in spite of what the Fed is saying, I expect that he'll do a reversal. And at the point of reversal, that's when, you can pretty much, based off of history, really start to put in a lot of money. You could start to really double down on your dollar cost average. Now, I haven't stopped dollar cost average in any of my plays. My $5 a day challenge, I never stop that. I want to be crystal clear. It doesn't matter what's happening to the market. If it's blowing up, if it runs up 30% in a day, if it tanks 80%, I never stop that, okay? And so those companies are blue chip companies. Those companies are VOO and VTI, the entire stock market, or the S&P 500, the Microsoft, the Googles, the Nvidias. I never stop on those, but those are small amounts. Remember, that's why we call it $5 a day cup of coffee, right? Those we never stop. We're committed to those for a minimum of 10 years because we want to build generational wealth. But sometimes when you're losing, you just need to pause for a minute. And then not just pause, go back and see every mistake or every bad call and write down and be fair with yourself. Why? Why did I lose money in this trade? Okay, sometimes you can't help it. Sometimes something comes out of the blue. It's a geopolitical situation or whatever. With the banking, just falls apart because of a bad player. It sneaks up and gets you. I get it. You're not going to always get the perfect, pinpoint exactly what happened. But in most of your trading, there are some things. Hey, I heard something from a friend and I just jumped on it. That you need to write down and say, don't do that again. And believe me, I've had 3 plays this year, in the last year, where I've spanked my own wrist because I went against my disciplines. Okay, good people? We're going to leave it right there. Sorry for this one being so lengthy, but I just want to hit you guys with some important information. All right? Hey, make sure you check out the 2 top links below. Remember, it's Moo Moo Monday. Get the free stock, deposit a minimum of $100. And then the more you learn, the more you earn. And check out Stock Up University, our stock trading class. And we are releasing a new video this week. All right? Peace and blessings, good people.